Tonight, home loans from hell.
All these fees are racking up, and none of it made sense. And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
A government program designed to help homeowners instead may be helping banks make money while driving some borrowers into foreclosure.
Maybe wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure.
And once the American dream, is it still a wise investment?
It's no longer a matter of, let me get in the biggest McMansion I can possibly finance. It's a matter of saying, what do I need to live, and I'll invest elsewhere.
We'll bring you the news tonight on Dan Rather Reports. Good evening. By all accounts, America is facing a foreclosure tsunami. 14% of homeowners in this country are currently delinquent on their mortgages. By the end of this year, foreclosure notices will have been sent to nearly 3 million homes, and a second wave is predicted. You're going to hear a lot tonight about servicers. It's a word that is used in the mortgage industry to describe where you send your mortgage payment. Wells Fargo is a servicer, as is Bank of America, for example. But servicer has taken on a whole new meaning to homeowners who are in trouble. The country's largest mortgage servicers have been battered in the headlines and on Capitol Hill for allegations of robo-signing and using fraudulent documents to foreclose on homeowners. But that could be just the tip of the proverbial iceberg with the servicing industry. A little reported and little understood aspect to the foreclosure crisis, claim consumer advocates, is that foreclosure is in fact a lucrative profit center for the servicers who are making millions off a laundry list of fees. The banks who service home loans dispute this, but we've been talking to homeowners across the country who say their servicers pushed them into foreclosure instead of working with them to modify their loans.
I can't tell you how many times I pulled into my driveway that I honestly looked at my front door to see if that sticker was on my front door, to see if my house was going to be sold in a sheriff's auction.
Belinda Brooks is the mayor of Luckey, Ohio, a small town of about 1,500 residents just outside of Toledo.
Good. Well, trouble and double trouble.
But being mayor is only a part-time job.
See ya.
She's also a small business owner who moved here 9 years ago to get away from the big city.
Did you do all these January reports yourself?
When Brooks moved to Luckey, she fell in love with the community.
Let's get all your stuff ready.
I don't want to go to school.
Oh, yes, you do. You like school?
Here, the mother of three found good schools and a low crime rate.
Oh, you're so big.
Her business is administering health plans for small companies.
Who's coming in 23 days?
Santa. Santa.
Oh, really? You think?
Yeah.
Do you?
But when the economy soured, her business started to slow.
Sam, you want to slide through?
So Belinda Brooks did what she thought was the right thing. She began planning for the worst.
It was clear to me that the economy was taking a hit, so we were engaging and getting ready for less income. So I was just trying to make sure that I was ready for that so I wouldn't be in a bad situation down the road.
Brooks' mortgage payment was $1,500 a month. She tried to refinance, but she was underwater, meaning her home was worth less than the amount of the loan. But she heard of a new government program that promised to reduce the payments for 5 years just to keep homeowners in their homes and slow the national foreclosure bleeding. It's called the Home Affordable Modification Program, or HAMP. The government wanted banks, the same ones that had just been bailed out with taxpayer money, to return the favor and help homeowners like Belinda Brooks. But instead, many homeowners across the country say loan modifications have been a nightmare that's led them to financial ruin.
And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
Belinda Brooks' story is similar to many we heard. But to understand what happened, you need a quick lesson in 21st century economics. Gone are the days of personal relationships between banker and borrower, as was depicted in the classic movie, It's a Wonderful Life.
Mr. and Mrs. Martini, welcome home.
Bread, that this house may never know hunger.
And wine, that joy and prosperity may reign forever. Enter the Martini Castle.
Today, there often is no relationship between the borrower and the lender. The banks that sold you the loan earned a fee for doing so, and then flipped it to Wall Street. Wall Street sliced and diced the loans and then sold them to investors around the world. Those investors own your loan, but the bank that sold you your mortgage is still in the picture, often serving as the middleman, collecting payments and deciding who and who does not get a modification.
So the bank doesn't actually hold the paper,
That's right.
but it services the loan.
It services a loan, and you don't have any control over who services your loan.
According to Diane Thompson of the National Consumer Law Center, that is a problem when it comes to modifying loans.
And so you're going to be making your payments to somebody who really doesn't have any interest in seeing you perform on that loan.
When Congress wanted to know about loan modification programs, they called Diane Thompson to testify, and she spared the servicers no mercy.
Servicers do not believe that the rules that apply to everyone else apply to them. This lawless attitude, created in part by financial incentives and too often tolerated by regulators, is the root cause of the robo-signing scandal, the failure of HAMP, and the wrongful foreclosure of countless American families.
Thompson says there are three players in this drama: the homeowners who are losing their homes, the investors who are losing money on bad loans, and the banks or servicers who can actually make money off of foreclosures.
These abuses occur because servicers have strong financial incentives to deny permanent modifications and in many cases to proceed with foreclosure. The illegal fees that push many homeowners into foreclosure are profit centers for servicers.
And those servicers, Thompson told us, can do quite well, even when homeowners and investors are losing their shirts.
Maybe wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure. They get all of the fees that they've charged off the top in a foreclosure before anybody else does. So
And
there are
those
lots of
fees
ways-
add up.
Those fees can add up to thousands of dollars, and they get taken off the top in a foreclosure. So the servicer gets paid first before anybody else gets paid.
Back in Ohio, Belinda Brooks was making sure her house was in order. Worried that her income would be taking a hit with the souring economy, she submitted an application for a modified loan that would lower her monthly payment. Her servicer was Aurora Loan Services in Colorado. She told us that from the start, they said they kept losing her application.
They didn't have it. They lost it. Then I have to refax it. So this process went on for 7 months, and phone calls and phone calls and phone calls, to where it was maddening, really. It was just crazy.
After months and months of sending and resending her application, the mayor from Lucky was anything but. Aurora kept her in limbo until finally, she says, the servicer suggested something surprising.
They kept telling me if I were behind on my payments, I would be placed up higher on their preference and priority on getting placed into a modification program quicker. And I kept saying, well, I don't want to be late on my payments. That's, not the purpose of what I'm trying to do. And they just kept saying, hey, you need to miss.
Brooks says she finally decided she had no other option, so she purposely missed a payment.
And so when I did pay that month late, and then all of a sudden, poof, I got my trial modification, I was very, I want to say encouraged that, oh gosh, you know what? Maybe that was it. Maybe I just needed to do that, because then I got my trial modification, and I thought maybe this will work out then.
The trial modification is the first step in HAMP, that federal loan modification program. Borrowers must show that they are able to make the adjusted payment on time for 3 months. Then they are put in a permanent modification. Mayor Brooks' modified mortgage payment dropped almost $400 a month.
Paid all 3 of them on time, perfectly on time.
But it didn't matter, because Brooks was in for another shock. While one banker was working to modify her loan, another, at the same time at the same loan company, was beginning the process of foreclosure. It's called a dual track.
Every time I was sending them my modified amount, it was not going to any of my principal. So every time I got a bill, nothing was registering or making sense. So it kept saying I owed. And when I called Aurora about that, they said, don't panic about that. We have to show it like that. Once you get into your modification, it'll go back to normal. All that will be included into your loan, and it will be remodified.
Brooks completed her trial period and waited for the bank to send her a permanent modification. When it didn't come, she called the bank to see how much her next payment should be.
It was right about that time in December when they changed my payments, and I got really, really nervous because I thought, this is just really strange. And then I got, in January, first week of January, they sent me a letter saying, we want you to send in all your paperwork again. You need to submit all your paperwork for a modification. I thought, are you kidding me? Do you know how many times I have sent this stuff in? You need me to send all of it again? These packets are like this thick.
It's set up so that if homeowner makes 3 trial payments under a modified loan, then they should be converted to permanent. But what's happened is that homeowners are pushed into trial plans that never convert.
Philip Robinson is the executive director of Civil Justice, a legal services firm in Maryland. His organization helps run the largest foreclosure prevention project in the country.
Well, that's on him, though, isn't it?
He says what happened to Brooks happens thousands of times across the country. Borrowers told to miss payments, paperwork lost over and over, and trial modification periods that go on and on.
You're supposed to convert at 3 months, but because they're not converting people at 3 months to permanent loans, they're stuck in limbo for extended periods of time, sometimes over a year. While they're in limbo, they're continuing to make their trial payments. The fees and interest on the loan may keep accruing, and it's another way to pad the fees for the servicers.
And Attorney Diane Thompson says, borrower beware.
Yeah, so if you're told to stop making payments so that you can get a modification.
So you can qualify.
So you can qualify. You will get late fees. You will then be labeled in default, and that will show up on your credit, which will have all kinds of negative repercussions that will rattle through your life. And then also because you're in default, you are then at risk for being foreclosed on, even if you weren't beforehand.
If your HAMP trial modification doesn't work out, you're still on the hook for your original payments, plus late fees and other charges. And that's what happened to Mayor Brooks.
I mean, they're telling me I owe, $4,000, and then $6,000, $9,000, $11,000, $12,000, $14,000. This whole time it kept going up, and none of it made sense. There's no way I could possibly owe that kind of money. That is when I got extremely nervous, and I started getting online and started doing some research about Aurora, and that's the point when my heart sank into my stomach, and I about got sick.
Brooks found chat rooms and postings about dozens of borrowers just like her who were making the lower modification payments, only to find out that the servicer, the same servicer that was supposed to be helping them, was beginning the process of foreclosure.
And that's when I panicked. I literally panicked, and that's why I said, I want out. I want out. I want to stop doing this. I'm writing a check for the full amount. I want out of this program. I will make restitution on whatever damage was done from those trial modification payments. I will pay the late fees. I have a letter saying I'll pay the late fees. I'll do what I need to do, but I just want to get this cleaned up because this has been a mess.
Brooks went back to paying her full mortgage payment, but one banker wasn't talking to another, and she was placed in default. As incomprehensible as it sounds, 2 months later, after making all her modified payments on time, the Aurora loan servicer foreclosed on Belinda Brooks' home.
I about sank. I just started crying. You know, I thought, I'm gonna lose my home. You know, and that's the only home we've had. You know, my poor kids just, they hear me talk about it, and you know, it breaks my heart to watch my little son. He's 6, and his little chin starts, you know, quivering. He's like, I don't want to leave our house. I love our house, Mommy. You know, that's what, you know. I don't care if I have to make a different home my home, but you know, to have to make them leave the only home they've known because of somebody's clerical error and somebody that just doesn't really care, that's craziness.
Coming up next.
Well, they were supposed to be doing the modification.
From California, the story of the Reagans and a surprise visitor to their home.
And I answered the door, and there's some guy there and asked, could he look at our home before the auction? And I was like, before the auction? What auction?
In February 2009, the White House announced what was supposed to be a massive government remedy to the housing crisis. Its biggest component, the Home Affordable Modification Program, or HAMP for short. The goal of HAMP was to help 3 to 4 million Americans modify their mortgages so they could stay in their homes by cutting interest rates, extending the terms of the loan, and even delaying principal payments. The program has $29 billion to spend on the effort, and so far, HAMP has helped 500,000 homeowners get permanent mortgage modifications that, on average, cut their monthly payments $500. It's a start, but critics say still far short of what's needed. And most worrisome are allegations that the program has actually left some homeowners in worse financial shape than they were before they enrolled. Tim Masad says that's not supposed to happen. He is the acting Assistant Treasury Secretary for Financial Stability in Washington, the office administering the HAMP program.
Well, was or was not the idea to have banks help homeowners when they got into trouble with their mortgages?
Yes. The idea was that the government wasn't going to rewrite the property laws to mandate that contracts be changed. A mortgage is a contract between the bank and the individual. The idea instead was that we would pay incentives to get banks to modify the mortgages for those people who could afford to stay in their homes.
Has it worked?
Yes, I think it has. We've not only achieved a lot of modifications through the program itself, one of the important things we've done is we've changed the way the industry, the banks that is, approach this entire issue. What HAMP did was it set some standards that now have been followed by the industry at large. It set what we call an affordability standard, which is we measured what the payment should be relative to someone's income, so that you say, you know, basically it has to be in a range. Initially, the bank has to reduce it to 38% of your income, and then the program brings it on down to 31%.
In October 2010, the Special Inspector General overseeing the HAMP program issued a dismal report saying that, quote, a program that began with much promise must be counted among those that risk generating public anger and mistrust.
Well, if you don't mind, let me tell you about some borrowers that we've talked to. Mm-hmm. We've talked to a lot of homeowners and all across the country who tried to get help through HAMP. They've called their servicer and have actually been told, they say, that they must miss payments and be in default before they can even be considered for modification. Is that happening to your knowledge?
That's not correct. The program is designed for people who either have missed payments or are facing the risk of what we call imminent default, meaning a hardship that may very well cause them to miss a payment. It's not for people who are otherwise doing fine and current on their mortgage. We don't think government money should be used for that. But we don't have a program where people are told that they must miss a payment in order to be eligible. They must, however, show that there is some hardship.
Then why is this happening? Why are they being told by the servicers this?
I don't know the answer to that. Obviously, this has taken a while to ramp up the program, to make sure the servicers understand it. We have to remember also the program is being administered through the banks. These servicing operations really weren't equipped to deal with this crisis. We've seen that in a number of ways. They were set up basically to collect payments on current mortgages and forward those payments to the investors. And the process of modifying mortgages involves a lot of contact with people.
They talk of being lost for months down what they describe as, quote, rabbit hole, where they can't get the same person on the telephone or talk to anyone who knows anything about their account. Right. The paperwork gets lost. Some of them have received notices that they had qualified only to be foreclosed on literally the next day. Now, this isn't the way it's supposed to work, is it?
It's not the way it's supposed to work, and there certainly have been instances like that. I don't think they're widespread, but they certainly have happened, and we're trying our best to prevent that. One of the things we did, for example, when you mentioned that people were foreclosed on, we recently said that if someone is being evaluated for a HAMP modification, then the servicer cannot proceed on a dual track of also preparing to foreclose or foreclosing. They must stop those proceedings and evaluate the person for HAMP. So the facts are this. We have had a very good success rate. The redefault rate on HAMP modifications is much, much lower than people expected.
But all the comforting words from Washington will have little impact on Dawn and Chris Reagan. They live in Fremont, California, about an hour south of San Francisco. In 2006, they bought a home there when their son Gary, a U.S. Marine, finished his tour in Iraq. But less than 2 years later, in 2008, the economy crashed, and Dawn, who runs her own business, lost 85% of her income. And Chris, a union stagehand, was suddenly getting a lot less work.
We weren't unemployed, we were just underemployed. And as a result, our income dropped. So we heard and saw in the news that the banks were getting a little help, and the federal government said you must give your customers help, just like we're helping you. And we looked into getting our loan modified.
There was no way to make that big mortgage payment. And so we figured we better proactively contact the lender. You know, because I would have to drum up more work and create more income is what I would need to do. That takes time.
But when they called their bank to inquire about a loan modification, they heard something familiar to others who were asking for help.
They said, well, you haven't been late. You need to miss 3 payments in order to show hardship.
And I said, what do you mean by showing hardship? Don't make your payments on your loan for 3 months. Don't pay your house payment for 3 months. And me and my wife were both like, are you crazy?
The Reagans said that after this advice and much soul-searching, they stopped making their mortgage payment and sent in an application for a loan modification.
They want you to write a hardship letter and fill out a financial worksheet and submit 3 months bank statements, paycheck stubs, and in my case, profit and loss. It's this whole big package of everything you have to put together, and you submit that, and then they review it and let you know if you're approved or not. 40-some page, I mean, huge faxes. We would send them, and I would print the confirmation from the fax machine that it went. But they would say they didn't get it, or they would say something was missing from it.
The Reagans went through the process for over a year. They were denied a modification that would lower their payments over and over again. Yeah. Sometimes they were denied because the bank said they did not complete their paperwork. Yeah. Foreclosure expert Philip Robinson says he sees this all the time.
Well, the first and number one main problem is they send the same documents to the servicer over and over, and the servicer, for whatever reason, can't figure out how to find them. They send them to the fax numbers they're told to send them to. They send them to the email addresses they're told to send them to. They mail them to where they're told to send them to. In some cases, they get letters back saying that all the paperwork's received, and they still are denied HAMP saying you didn't send the paperwork.
But like, here's a fax that we had to send.
Other times, the Reagans were denied because their bank said their income was too low and their expenses were too high.
What is other charge?
But the numbers the bank was reporting didn't make any sense.
They basically would say, you've been denied on the premises that we've crunched these numbers that you submitted and it doesn't work out in your favor. And I would ask, well, what's your process? How do you crunch the numbers? Please give me some insight. And they wouldn't tell us.
The Reagans said the whole time they asked the bank if they could make some sort of payment. They say the bank told them if they couldn't pay all their arrears, they'd have to wait for a modification. But finally, after the Reagans hired a lawyer and a housing counselor, the news they had hoped for, almost a year after they began the process, a letter arrived.
The letter says you did it. It says that in the very beginning. You've been approved for the trial loan modification, the HAMP loan modification.
This is March 24th of 2010. We got that letter. You've been approved. The very next day, March 25th, we have a letter from ASC or Wells Fargo saying, sorry, you've been denied for your modification. We put the denial letter to the side because we were just going with the good news. And they said, you've been enrolled in the program, make 3 payments for the next 3 months, 1 payment per month. And once you've paid that in a timely manner, after the end of the 3rd payment, you will be approved and you'll have the paperwork sent to you for the final loan.
Then came a nightmarish sequence of events that began with strangers telling the Reagans their house was about to be auctioned.
And I closed the door and I was like, that is really weird. And then later that day, another person came to the house and knocked on the door and asked could they see the home. And at this point, I'm really alarmed because I don't know what to do. And I said, we're in the middle of a loan modification. There's no auction.
Stunned and panicked, the Reagans quickly called their bank, Wells Fargo.
The operator answered the phone. She had said, oh, yes, well, your loan is going to default. We're going to foreclose on you. And I said, well, wait a minute. We were in a modification process. I paid my 3 payments on time. That's the only way that I could have been disqualified from this program is not paying my payments. I paid them over the phone, so I have confirmation numbers, not like a check got lost in the mail.
And just when they thought it could not get any worse, another knock at the door.
I was sitting there with one of my friends, and this guy comes to our door and says that he's the realtor that represents the investor who bought our home, and that we don't own our home anymore. And I said, that's impossible. We're in the middle of a loan modification.
But they were not in the middle of loan modification. They were at the end of the line. The Reagans' house had been sold without them ever knowing it. More than a year of frustration had ended with the worst possible outcome.
I mean, it's not an extravagant home, you know, but it was our home.
The real winner was the bank. Attorney and consumer advocate Diane Thompson says the longer the process, the more opportunity for the banks to earn fees.
Once the house is foreclosed, they'll continue to charge fees for things like cutting the grass. We've seen $100 fees for cutting the grass, securing the property, going by and checking the property every month. They'll charge fees for insurance. They'll place insurance on your property that you don't need and don't want and charge you for that. And we've seen cases where they've charged 10 times what the going rate for insurance was. And they can't charge many of those fees in a modification. They don't get those fees back anywhere near as quickly in a modification, and that ultimately also a foreclosure will allow them to cut their losses because a foreclosure will guarantee that they get all of those fees back right off the top.
I was paying every month on time, and they kept telling me to pay late.
Belinda Brooks, the mayor in Lucky, Ohio, got a bill right after the foreclosure on her house with over $2,000 in fees. When she tried to get an accounting, they sent her what she said was an incomprehensible computer printout.
And then your total payment due is $25,700 and some dollars because of overdue payments and late charges. And
the Reagans never saw the final bill for their house, but all along they were seeing fees that they didn't understand. We wanted to ask Wells Fargo about the Reagans' foreclosure and about Diane Thompson's allegations. They finally agreed and asked us to come to Washington for an interview. We did, but in the hours just before the taping, Wells Fargo backed out. They canceled. One after another of our requests to the mortgage servicers, Bank of America, Chase, and Aurora Loan Services, were denied. But they did talk to Congress, where their lobbyists have considerable influence. Emotions were high in a packed hearing room November 2010 when bank executives were expected to be called on the carpet. David Lohman, the Chase home lending CEO, was reading his opening statement.
I want to emphasize that Chase strongly prefers to work with borrowers to reach a solution that permits them to keep their homes. Foreclosures cause significant hardship to borrowers and communities. Foreclosures.
Not have them perjury. What you're saying, you need to hear from the whole.
Officer.
He's lying. He is lying.
Senator, we absolutely do not sacrifice the long-term brand of Bank of America for the opportunity to have short-term gains in fees.
Barbara DeSower is the president of Bank of America Home Loans.
We put the interest of the customer front and center. That's part of the core value of Bank of America. But we have to also reference the interests of the investors, whether that be government agencies or private investors, as well as our role and responsibility of servicer.
Yeah, I would echo Mrs. DeSower. I mean, the fact is we don't make money when we foreclose on customers. It is in our best interest to figure out ways to make loans perform again. We have a balancing act to do. We have to do what's right for the borrower and at the same time do what's right for the investor, who we have a duty to minimize their losses.
Still, according to third-quarter government filings, the bank servicers have earned hundreds of millions of dollars from late fees and so-called ancillary fees associated with delinquent mortgages. Wells Fargo earned $606 million in late charges and ancillary fees during the first 9 months of the year, up significantly from what it earned the year prior, $453 million. At Citigroup, late fees and other ancillary fees totaled $212 million, up from $131 million in 2009. And GMAC, now called Ally Financial, earned $202 million in late fees and ancillary charges, up from $175 million in 2009.
Well, for all the horror stories that you hear in traveling around the country, there are plenty of people watching tonight who might have little sympathy for homeowners who take the view, listen, they entered into a contract, they knew what they were getting into when they entered into the contract, and if you can't pay, then you know there's going to be a foreclosure.
Well, I would say two things. I would say the first thing is that many times what we're talking about are not people who entered into contract and understand the contract and then just didn't make payments. Many times what we're talking about are people who did make their payments, wanted to make their payments, tried to make their payments, and because of things that the servicer did wrong, because of fees that the servicer piled on, because the servicer refused to accept their payments, because the servicer added insurance that wasn't legal to their account, for all of these reasons, that's what forced them into foreclosure. So I'm not asking for a gimme for homeowners, not a get-out-of-jail-free card, just a situation where the investor, the person who holds the loan, is going to make more money by modifying the loan than by foreclosing. And in those situations, we should see modifications, and we're not seeing modifications in those situations.
We liked our home, we paid our bills, and we had some unfortunate circumstances happen to us. We knew we would get more income again later. It's not going to last forever that way. And what was so difficult about just working with us?
Wells Fargo eventually admitted in a letter to the Reagans that it had, quote, inadvertently removed them from the modification process, which led to foreclosure on their home. But it's likely the Reagans weren't the only ones who were hurt. There's a good chance whoever owned the Reagans' loan would have done better with a modification rather than a foreclosure.
They sold our home for $230,000. We owed $590,000. We were going to pay $590,000, even though the market dropped, but they said no, and they turned around and sold it for $230,000.
Well, the investor put it on the market immediately for like $125,000 profit or something to them. And you've worked so hard to try to get this loan modification, and you finally do, and then they turn around and do this. And you can't get anyone that cares or anyone that really wants to help.
The Reagans still visit their friends in the neighborhood, but their house belongs to someone else.
Well, the services, they acknowledge that they make some mistakes. Paperwork lost, modifications delayed for a long period. But they say that it's not intentional. Do you believe them?
What I know is that we are now 3 years into a national crisis, and I don't see any significant improvement in their handling of paperwork or their processing of modifications. And I believe that if they wanted to fix this problem, they would fix this problem.
Thanks for coming, sweetie.